Being an investor is challenging enough, but when markets act like they do right now, with some things flying high and others cratering, it really tests investors' ability to keep their resolve and keep to a plan. This week, we look at the importance of answering the question, what do you really believe? When things are going well, like last year, second least volatile year of all time, lots of different things from various parts of the bond market, international stocks, the domestic markets having high single or double-digit returns. It's easy to pretend that there aren't things that maybe need to be confronted. When you get into years like this year, a lot more volatility, certain asset classes not having good years, certain parts of the market having very good years, then it becomes a bit more challenging. Those twin fears of either the fear of losing money or the fear of missing out start acting on us. It's at these times, as an investor, certainly these things can relate to other aspects of life, but you really need to ask yourself, what is it that you believe in? What are you anchoring to that when the storms come is going to keep you grounded where you want to be? I want to talk real briefly today about where we see our role in that, some questions for people to really answer honestly for themselves. We're going to follow this up over the next few weeks about who are you really as an investor, and then wrap that up with what are the truths that we subscribe to here at 10 Capital, and how do we feel like our process can help people through this behavioral finance component. So with that, one of our biggest jobs for a statistically valid reason, if you will, is convincing people that mindset matters, that this answering these questions, understanding what to expect from markets, if not when to expect it, which no one really can do, is one of the critical pieces to investing. People focus on following the hot fund or stock. They focus on fees. They focus on trying to find a star manager. They focus on trying to find some magic product to believe in. If you do any of those things, quite frankly, you're going to lose out on a lot of opportunity. You might really hurt yourself and your family's finances. And as we were talking about right before we went live here with the camera, if there's one thing that keeps me up at night or that continues to drive me about this business, it's helping take care of people, protect people, educate them, and most importantly, putting being honest above my own or the company's financial self-interest. That's unfortunately rare in the industry. We live in an industry that's predicated on trying to sell you stuff and trying to take advantage of your fears. Again, whether that's of missing out and telling you they got some hot stock pick or magic guru manager, or they are a magic guru manager, or of your fear in selling you things that get to use fancy words that they've lobbied for, but really at the end of the day don't mean much other than a lot of money in their pocket. I've lost out on a lot of business over the years because I wouldn't play that game, but it's one of the, doing that is one of those things that doesn't keep me up at night, and I want to keep it that way. Investing is about trade-offs. Investing isn't about trying to avoid volatility, but just being thoughtful and intelligent in how we approach the risks and trade-offs that we take. And that can certainly be one of our rules. Just asking the right questions and being there for people as they find the answers that best fit them. So as we sit here in this market where we have some high-flying things and some things that are getting hit hard, that might be more things than not here the last couple weeks, I wanted to ask some questions, again, that we'll work through over the next couple weeks, but I'll leave you with them today for you to think about as an investor. Number one, do you really believe in diversification? I think this is an important question to ask, particularly for those people who maybe their biggest fears of missing out. We see it all the time, from niche crazes like Bitcoin and people trying to chase that as a get-rich-quick scheme, to people who isolate themselves only into tech stocks or 2 or 3 different stocks, or maybe their own company's stock, whether it's a bias of familiarity, a recency bias because of the returns that have already happened, that my colleague Ryan's written about countless times, creates a lot of problems for people in almost all circumstances. Little fact to keep in mind as you're walking through this. If you fell privy to the dot-com craze back in '01 and maybe got in somewhere near the high, it took you 15 years to get back to even. A lot of life happens in 15 years. A lot of goals and dreams people hope to realize in 15 years. But again, even in a broad-based diversified index, took 15 years for people to get back to even. I hate to see that happen for people. The old adage, buy low, sell high. Do you believe in that? You know, if you do, then understand what that really, really means. It means you're going to be buying things that other people don't want. You're going to be buying things that when you're looking at your 401k pamphlet have had the worst performance. And when you're selling high, you're going to be letting go of that thing that has brought you so much joy. You're going to be letting go about that thing that's making news headlines and that is getting featured on CNBC. That's the big number in your 401k booklet. But again, those adages, those cliches exist for a reason, and one of them is that more times than not, seeking out value as opposed to past performance is the true recipe for long-term success. Do you believe that volatility and corrections are a normal part of being an investor? I think, again, most people would say yes, and yet they allow themselves to be triggered into emotional states all the time by market volatility, as we've seen recently. 1% moves in the market happen almost every week. 5% on average. 5% moves happen 2 to 3 times a year historically. A 10% drawdown in the market happens almost every year. 20, 40% corrections usually have only happened every couple decades. But keep in mind 2 things there. Number 1 is it is part of the process. Number 2 is how frequently the 1s become 5s, the 5s become 10s, or the 10s become 40s. It's so easy to, again, think that this is the beginning of a big thing, as opposed to just the normal chop and process of a market moving higher over time. Finally, do you believe you can time the market? I think most people would say, well, no, I don't believe I can predict the future. And the reality is I'm not aware of anybody who can. And yet time and time again, we see people who will say that, but then say, but yeah, just make sure, we get out before the market goes down. Or no, I want to hold all that cash until you think the market's about to go up. That's market timing. You can call it whatever you want to, but making investment-based decisions off feelings or some ability or belief that you can prognosticate is market timing. You can believe it, but just own it and understand that that's in fact what you're doing. 3 truths that we'll unpack again in the videos ahead that I want to leave you with, again, to understand when you're thinking about these questions. Number 1, volatility is inevitable, but risk doesn't have to be. They're not the same thing. Volatility is the turbulence of life. It's the turbulence of markets. Risk in terms of investing is a permanent impairment of capital. That's about putting time constraints on things. It's about maybe not being as diversified as one should be. It can be mitigated. The second one is the market doesn't care about you. It's an unfeeling thing. It doesn't care about your goals, your plans, your dreams. It doesn't care what you call your portfolio. You can call it the super duper fantastic growth portfolio. Doesn't make it go up. It might sound like a joke, but I've heard similar names from people and similar intentions. But the other truth is you can achieve your goals, you can achieve your dreams, you can mitigate a lot of those risks by just following a process, having a plan, and we can help. We'll move next week, really helping you maybe understand who you are as an investor, in addition to understanding these truths. And then again, wrap up this series by exploring our take, our truth, and telling you a little bit more about us. Thanks so much for your time.